Hello, Tony Daly, Santarelli Exchange, and this is the first in a series of lessons on charting and technical analysis. Technical analysis is the study of price and price behavior, and the idea of technical analysis is to basically use the past history of price as a basis for predicting future price. Now, it is far from an exact science because it doesn't take into account binary events and the nature of random movements of the markets. But a lot of people, almost all chartists, believe that price patterns leave a history, and the fact that a lot of people use previous points in time as targets make it self-fulfilling. And I choose to believe that also to a point. And the first thing you need to do is, as you see what we're looking at right now, is we're looking at a chart of RCL, or Royal Caribbean cruise lines. And the first thing you have to do, I don't have anything on here. I typically have pure price. And the idea is that you need to look at a lot of charts. You just need to keep looking at charts. And what you want to determine to yourself is the concept of a trend. And the concept of a trend simply says, in general, is price moving in an upward direction? In other words, making higher highs and lower highs. Or are we in a downtrend where price is making lower lows and higher lows? And when you look at that, that basically forms the basis on how you're going to go forward if you're looking for trading opportunities. So, for example, you really want to just train your eye to look at a lot of charts. And basically, we could see Royal Caribbean, as it has been going in this direction, it has been in what we call an uptrend. Now, lately, it's been in a downtrend. And you need to try to find out why, of course, and some of the reasons for that. As we go forward, let's look at Priceline. Now, looking at Priceline, you can see that we've had a lot of chop in Priceline. Priceline just basically, you could arguably say it's been in an uptrend, but it's been a very rocky road and a very choppy stock to trade. And recently, since November, it has been in a clear downtrend. So once you keep looking at these stocks and you look at all of the different things that happen with price, now here's Starbucks. We could notice that the price action of Starbucks has been steadily climbing, but lazily climbing. And then here we seem to be just kind of moving sideways to down a little bit. And then recently, we just had this, the last day has been a little bit of a breakout. These are the types of things that you want to do, is that you just want to kind of talk to yourself and you want to look at them. Here's your UPS. So we've moved sideways, not really in an uptrend, kind of sideways movement to down. And now we seem to be reversing here. Let's just keep looking at charts. Look at Microsoft. Microsoft, sideways chop, nothing happening. We gapped up on a previous earnings. We've basically moved sideways since then. It drifted downward, it filled the gap, and now we just gapped up on earnings. So the idea is the fundamental technical analysis theme is you want to make a determination of whether stocks are moving in an upward direction in general, in a downward direction, or just sideways chop. Let's look at Tesla and you decide. Okay, look at Tesla. Tesla, again, we were in an uptrend. We had a little bit of a channel here. We dropped off. A lot of chop in this area. Chop, 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 chop. Down. Big down move. And the stock has moved from a high of $286 to its recent price of $191. So that's almost a 100-point drop. So clearly, we're looking at Tesla, to me, has been in a downtrend. Now, when you're deciding on trading a stock, you want to basically look at stocks that give you the most favorable results, where you feel that you can make a profit either on the upside or the downside. And to do that, you look at a lot of charts and you find the ones that seem to make sense and work for you. Let's look at GoPro. Okay, clearly. I mean, you've seen the other stocks. This one should jump right out at you, and you just look at this and say, "Oh my goodness, downtrend." I mean, as terrible as a downtrend as you could see. And here we're moving a little bit sideways. Now, is this a stock you want to buy? Well, if you believe that it's as low as it's gone, and possibly they're going to be bought out, and who knows. Are they going to announce good earnings and maybe it'll have an interim pop? Anything is possible in a stock. But the basis of technical analysis is to look at where the stock has been and to give yourself an idea of where it might be going in the future. Next one we're going to look at is Google. Now here Google, notice every chart tells a different story. If I was thinking about trading this stock, now look at this. Back here last April and May, nothing but sideways. If you bought this stock here, it just did nothing. Up a day, down a day, up a day, down a day. Little bit of a breakout, tremendous gap up on earnings, and then it just sort of chopped around. This is not a stock to trade. I mean, you could clearly see that we are sideways. Every time we do something, we move sideways. We gap up again, we move sideways. We move down, now we move up a little bit. So this stock, can you arguably say it's in an uptrend? Well, every time it jumps up, it seems to gap up, but then we just kind of chop and move sideways. Last one we're going to look at for now before moving on. Okay, this is Facebook. Again, we've had a little bit of a move up. We've had some sideways movement. This basically stock has gone nowhere. So if you bought this back here in the middle of July and you fast forward all the way to November, the beginning of December, you're in the same spot. Okay, didn't really go in there. So we can't call that an uptrend. That's just sideways movement. And then it's moved up a little bit on a prior earnings, more sideways movement, dropped down, and now it's gapped up on its last earnings, and it seemed to have found an established footing going forward. So how do you trade? What does all of this tell you? Well, what it tells you is that price seems to find a peak and then it reverses and then it finds a bottom and then it reverses again. So we call that support and resistance. And the fact that it comes down and it finds a bottom and then it reverses, well, what caused it to reverse here? Whatever caused it to reverse seemed to have taken a foothold and then it has continued up. Now, there were people that were short here. So these people who were shorted the stock and expected a continuance down either had to cover or they're still holding short right now. If they're holding short right now, they're in a world of pain as this stock continues to move up. But if you're short here and you see the stock reverse on you, you've got to buy to cover it. So that's called a short squeeze. And when that occurs, not only do you have the people who normally would be buying, that you have all of these people who are short and have to cover. So once you see a reversal happen, and you see these big candles that come in here, these engulfing candles right here, for me, these are places that I would look at for entry on a stock, and then I would place my stop at the bottom of this candle right here because it stopped and reversed. The market knows that, and all the traders know that, and they will use that as a target or a floor. So let's see how exactly this would look if we applied some very, very basic technical analysis to it. So the first thing we do is we're going to go and pull a basic price level. And what we do with price level is we draw lines at major tops and major bottoms. So we can start down here. There was a bottom because we reversed off of here. And here was a bottom. And this was also, we can call this a bottom, minor bottom. Here was a top. And we can call this a bottom. This is now support because that's where we went. So what I'm looking at, and this is also, we have a top across here. So all I really did was I looked at major reversal points. And now that I've done that, I could stretch this out and I find some defined points that are significant to me because they were significant in the market. So I could use these as some sort of targets. So the first thing you want to do is look for major points that you could draw lines and use them as price targets. We'll call them support and resistance points. Let's do it with another stock. So let's look at the SPY. Okay, the SPY, this is the S&P. Okay, this is very important because everybody uses this. This is such a major stock that's traded here because this is the market. So here is a support level, and then up here, of course, the top is always a support level. Down here, and basically what I have here is I have some targets and I have support. So if I wanted to go long here, because I've had some reversals here, I've had a reversal here, I've had price come down and retest this level, I'm comfortable that this level right here at 187.5 would be a good support level for me. That I think in the interim, can price break through it going forward? Of course it can. But it's intermittently, in the intermittent level, this is going to stop and reverse here. So the first thing I would do is if I wanted to buy calls or go long, I could do that and I could say that I'm going to have a fairly easy time. I don't have any other price points in the way of getting up to the 202 level on the SPY. So I have about 9 points of upside potential in here. So I could simply buy a call and look for this as a price target, or I could buy the SPY as an ETF and go forward with that. Let's look at another one. Okay, this is Lululemon. Lululemon's been in the news lately, and we could see Lululemon. Now, if you're training your eye, what can you tell me if we wanted to talk about this stock? This stock to me looks like we have been going nowhere and just chopping sideways, and then all of a sudden it's found some sort of bounce and now it's taken off to the upside. So we're clearly in an uptrend, and where would we go from here? If you wanted to buy here, let's just take a look at where some stopping points were. So this is a high right here. Notice we've tested this times 1, 2, 3 times. So we've tested this price 3 times. We're on the bottom, we're here. We had another stop and reversal there. And going across the top, we look like we have support right in this area right here. We see some tails going out, but look at how clearly defined we are right now. Just by simply drawing these lines where price has stopped and reversed, I've defined several channels that we could use for price targets and stops. So right now, if I wanted to go long Lululemon, because I definitely don't want to go against this trend right now, I would set a target of about 67 because we know that this price was tested 3 times. So since we were tested 3 times, it could surely be tested 4 times. So you could buy the stock, you could buy a call, you could do some credit spread strategies, but I would be looking at a target of 67. My stop on the downside would be where it seemed to pause down here. We've tested this area 3 times, down around the 54 area. So as a first in a series of many videos on technical analysis, what I want you to do is think about looking at a lot of charts with nothing on them and just deciding, are we in a chopping mode? Are we in an uptrend? Or, for the last one, are we in a downtrend? That is the first step that you want to determine when you're thinking about getting involved with a stock issue. What is it doing? What is the dominant trend? Is it moving down? Is it moving up? Or is it moving sideways? We'll talk about this more in our next video. Thanks a lot.